Hi, this is Amir with the pre-market open edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 15th of June. Starting off with the FTSE 100, where we're still in that range between the 50 and 200-day lines, 75.25 on the 200-day line and 77.22 on the 50. Resistance line there from back in April as well, level with the 50-day moving average, so looking for an end-of-day close above that to unleash a potential move towards 8,000 plus. Otherwise, if you were more keen, you'd be just waiting for that end-of-day close above 76.30, which was the initial April support for this market. So not too far away, but still not worth trying to get in too early on that situation, given that it could be we could continue with a sideways consolidation for quite some time. Moving on to the DAX, which has been a rather more dynamic situation, beautiful progression since that gap higher that we had at the end of last week, or the beginning of this week in fact. And looking at the larger time frame, we can see that there's a September resistance line projection at the top of that channel since autumn of last year. That's heading for 17,200. We're expecting that as soon as the end of next month. And I suppose if we're really lucky by the end of this month. But the closes, the positive closes for the DAX do suggest that we are on our way to a decent break to the upside, and only back below turn of June support there, 15,700, really delaying the upside scenario. RSI at 63, so we're not overbought, and we've had multiple bounces above the RSI 50 level as well, so that is very encouraging. On to the Dow, and here we can see that despite the Fed's threats, we're still in a relatively good place. The thing that we were fearing, I suppose, was that there would be a bull trap through 34,000, and we've sort of got that, but not back below the 50-day line there at 33,500. While we're above that, we're still looking for a break towards 34,800. Over the next couple of weeks. Big picture target over the summer, if everything remains above the 50-day line, would be up to 37,000 at the top of that rising trend channel from back in August. But the current situation here really defined by that one-year resistance line from last April, right on the 34,000 zone. Moving on to Bitcoin, which continues to be frustrating at the moment. We were fearing that there would need to be a test of support at old resistance. That was August to February resistance around 25,000, and then below that the risk of a test of the 200-day moving average and the floor of a rising trend channel, or at least an uptrend line from December, around the 23,700 area. So that looks as though where we're heading. Looks as though we're heading for that particular level. And we could see that, I suppose, by the end of this month. On the upside, really the earliest trigger around 26,000, which was the May support for this market. Otherwise, probably to be safe, really looking for that 50-day line to be broken at 27,100, which is obviously a long way away at the moment. On to the stocks, and a few repeats from recent days, which is normally a good thing. Abingdon Health is one of them. Good close yesterday, and basically here we've been looking for 20 pence. We've been looking for 20 pence, I suppose, since early May. We had a rally to 12 pence and then came back, which was slightly disappointing, but now it looks as though we're on our way with a V-shaped bull flag breakout. 20 pence is the top of that broadening triangle from February last year, and hopefully we'll hit that as soon as the end of this month. And not expecting now any lasting probes back below the 13 pence level, the May intraday peak. Stock which is looking encouraging, even though it's still relatively off the radar, is Aterian. Here we broke a line of resistance from March and the 50-day line around 0.85. We were waiting for the 200-day line to break at 0.92, and above that we've got a target as high as 1.1 pence by the end of next month. At the moment it looks as though it might actually get there well before then, but the upside valid certainly, while we're still above the old May resistance at 0.87. On to Clontarf, which is your sort of classic punting situation here. We've broken above the 50-day moving average, as we were hoping. We already had bullish divergence there, so lower lows for the start of June, but a higher RSI tracer that was forecasting a break of the 50-day line, and above 0.12, looking for 0.21 or even 0.22 over the next few weeks. I could argue that this resistance line is actually like that after 0.24, but going for 0.22 initially, and let's see how we go with that, especially while we're above that 50-day line. On to Eden, which I suppose you could say is a little bit of an unlikely winner over the recent past. Here we had a trendline break around 4.6 pence, and we're nearly up to the target we had around 7 pence, so just a fraction away from that. Above 7 pence, looking for as high as 10 pence by the end of next month, which is an October 2021 resistance line projection. Ideally, we stay above the resistance on the way down, which was 5 3/4 pence in the meantime. Had a request for fusion antibodies, which has obviously been something of a horror story over the recent past. The basing here looks a little bit like the CAPEX basing, i.e. we've got a neckline resistance. In this case, it's around 7 1/4 pence above that. Looking for, I suppose, the low teens at best. Obviously, it depends how much of that massive drop that we retrace, but historically, you'd be looking for sort of 11, 12, 13 at the most, while we're above 7 1/4 on that as a best case scenario target. There is bullish divergence, so we had lower lows for the beginning of June, but the RSI trace has actually been trending higher even before the price move. So slight interest there in terms of getting back to, as I said, the low teens while we're above the 7 pence zone. Onto a stock which I haven't covered at all, I think, here before, which is Gusbourne, and here nice breakout through the old August resistance there around 77 pence. It looks as though, although this is not the most liquid or active situation, we're in a rising trend channel from the end of 2021 heading for 105, and I suppose 105 will be seen over the next 1 to 2 months, something like that, while we remain above the high 70s. Onto another stock, well, a stock which I haven't looked at for quite some time, and you'll be able to see from the chart probably why that's been the case, but just some glimmers of hope here with Lansdowne breaking a trend line there from the end of last month, and that was around the 0.15 area. Looking for the shares to get into the low 20s, really, to see the resistance obviously coming in with the top of that gap down. Bullish divergence as well. So as I said, maybe 0.21, 0.22, something like that is feasible for Lansdowne, even if we then fade away after that. NetScientific is next, and looking rather more encouraging here than it has done for quite a while. We had a bear trap gap reversal, so gapping down at the beginning of the month and then closing that gap yesterday and closing right on the 50-day moving average. There is a line of resistance there at 78 pence, but looks as though enough has been done in terms of support at 60 pence to give the shares a journey or a potential route up to £1 by as soon as the end of next month. Ideally, we stay above the 200-day line, 66 pence in the meantime. I'm enjoying Predator at the moment, largely because there are no fundraisers or no new ones, but the shares delivered a great bear trap gap reversal and have closed this week above what is a rising 50 and 200-day moving averages at 7.8 pence. For the 200-day line, above the 200-day line, looking for as high as 11 pence by the end of next month, and if we're really lucky, it'll be by the end of this month. Polarean also improving at the moment after a rather torrid start to the year, one could say. Here we broke above the 50-day moving average and broke that resistance line from February around 25 pence. We've been looking for as high as 40 pence by the end of next month, while we're above 25 pence. Just on to the last two. First one is Vast Resources, which pulled the rug as well earlier in the month. Bear trap from below the 200-day line there at 0.46. Above that, looking for, I suppose, at least the what we thought was going to be the support area in the low 60s. 50-day moving average currently at 0.63. So I think if we can just get up to that, that would be quite a result for holders. Finishing off with Westminster Group, and here, after the unfilled gap to the upside, at the start of this month, we've got rising 50 and 200-day moving averages. Just want to see a break of 1 3/4 pence on an end-of-day close basis, and we could be open to a potential move to as high as 3 pence by the end of next month. But bullish divergence going into the gap higher, and also we've got those two moving averages rising, which tends to be a decent continuation signal or recovery signal. That's it for me today. More updates tomorrow.